and welcome to Cannabis Quick Hits by Greenspoon Martyr. I'm Nick Richards, chair of the cannabis practice here at Greenspoon Martyr, a global cannabis tax firm. I've got with me today, really excited about my guest today. Daniel Russell and I have really kind of become decent friends as friends can be, working. Daniel's in Maryland. I'm here in Denver. We have some common clients together. We've been having a really good time working together, helping cannabis companies get their accounting right and understand their industry a little bit better. Dan, how are you today?
I'm doing well, Nick. Thanks so much for that kind introduction. Really appreciate being able to spend some time here together on camera and talk about all that stuff in the cannabis world as you and I experience with our work. So thanks again.
It's always changing, isn't it?
Yes.
Yeah. I think that it would be great if we could hear a little bit about kind of what's going on there in Maryland where you are. Every state's a little different, as we all know, and every timeline for every state is it's not a straight line, is it, Dan? What's going on in Maryland?
No, it is not. So yeah, in Maryland, as of the present moment, there are a couple of bills that are still in some of the initial stages, but in the legislation this year, it looks like Maryland is beginning to discuss legalization for recreational use of cannabis. Here in Maryland, we've had cannabis legal for medicinal purposes for a number of years now. So this would kind of be the natural next step, like a lot of states around the country are taking. I believe in most recently close to us in Virginia, the same sort of initiative was begun, but didn't have the legs under it. So there's still more to come in Virginia, and hopefully in Maryland, that doesn't happen, and we're able to see some changes. But with that said, while that conversation is occurring, as we work with clients that are working with patients in Maryland that are able to use cannabis on a medical basis, obviously adding in recreational would drastically change the game for a lot of those providers, or really for all of those service providers, the cannabis. So there's just a lot of conversation in the state right now around the logistics of, if we really were to make this a reality, what would that actually mean? What are the unintended consequences? Et cetera. But nonetheless, like I said, there's legislation that's being discussed right now, and we'll see what happens in this year's session, and if any of that legislation actually comes to fruition and we get recreational legal in the state of Maryland. So that
could really be the difference between, I apologize, for these businesses being profitable or not. Here in Colorado, and then in subsequent states, when we saw the industry, add in the adult use, boy, you saw a lot of dispensaries. The next day, their revenue increased, 5-10 times, and so it really made a big difference for the industry here.
Sure. There's no question that from a top line standpoint and from a customer base standpoint, obviously, recreational use where it wasn't present before is going to make a huge difference. I think the idea, though, is that it's got to come somewhat, incrementally, because if it's just a light switch type of a situation, while I agree you can have the growth that you described 5-10 times, but you kind of end up in the opposite space where you've got too much to handle, and you end up with all of the problems that come along with not being able to do and get enough. Really, it's about getting the product, get enough product to customers, because the moment the state's already struggling with inventory availability and the rest of it, and pricing related to it. And so obviously when recreational became another source of revenue, that's going to drastically have an impact on the on the inventory levels in the state, and it's going to cause Maryland to have to change how it operates with respect to inventory and where cannabis can be can come from as far as getting it to customers. So good problems to have if they come, but like I said, I see it, in my opinion, happening more, slowly, gradually, incrementally, because if we try to do it all at once, I think it could end up potentially causing more problems than it's worth.
Yeah, we definitely saw some of those issues with some other states when they rolled out, and supply is an issue. Heads up, cultivators out there, right? There's your opportunity.
Mm-hmm.
Hey, Dan, are they talking about any special taxes or anything like that as well?
There's murmurings of that. There's nothing specific I have to report on yet related to that. But yes, that's obviously another aspect of it from the state side, right? If we make this recreationally legal, then how do we treat it? And do we use other states as examples? And fortunately for Maryland, we're not the first one, obviously, to this table as far as recreational use. So we've got the advantage of being able to look at what's worked, what hasn't worked elsewhere. And that's one of the other aspects that's going to need to be decided. How's it going to be taxed by the state, and how that all is going to work.
And a 280E add back, right? Do you guys have that already?
Nope.
Yeah, that needs to be part of it too, right?
Yep, exactly. Yeah. For the time being, Maryland does not decouple from federal, so what's taxable at the federal level is the same number that's taxable for Maryland.
Right. Which 280E then becomes a state penalty as well, and we don't want that, so we definitely need to get that in there.
Agreed. Yep.
And Dan, what are you seeing in the greater industry? Are we seeing that kind of rapid growth that we had been seeing in the past? What are you seeing out there?
Definitely tons of growth. A lot of M&A. Most of our clients in this industry, in the cannabis industry, are participating in at least some M&A, either themselves going out to acquire or being acquired. And so we're seeing a lot of combination of activities in terms of the providers out there, the service providers out there in the industry. And then we're also finding with that M&A, sort of to this multi-state point, a lot of businesses are sort of spreading out their impact so that it's not just a single state and its situation that needs to be or that provides for the revenues for the company. So we're seeing multi-state operators and some of our clients who were previously a single state operator or have become multi-state operators. So those two things, the M&A activity is really picked up in the past couple of years, and we're also seeing clients move or businesses move out of just a single state type of an approach, right. Start hitting more than one state and becoming MSOs or in the mergers or acquisitions, merging with MSOs already. So
the race to get bigger, right? Which it's a industry about margins, right? And that being bigger makes those margins better is the theory. It's probably true.
Indeed.
Particularly the when you're dealing with the penalties around 280E and that stuff. You seen any cash in these deals, Dan, or is it all paper?
Yeah, good question. There's a little cash, a lot of paper though, to your point. And yeah, I've seen a different variety in the experiences that we've had, but as you're sort of intimating, there's a lot of unknowns still. And while, like I said, there's been a ton of M&A activity, there are some that are better versed at it than others. And to your point, for those that aren't haven't been that successful or don't have the experience, oftentimes it's what causes a disruption or what causes things not to move forward is just that lack of certainty. That's obviously a big aspect of this type of a business. So yeah, there's a lot of paper in these deals and not as much cash as you might expect to see in a different industry that's just a little bit less risky.
Yeah, and I'll just throw this out. When you see that paper in those deals, that's a hey, I need to get my tax professionals to take a look at this. Am I gonna have to pay tax on that paper or not? It's a pretty big bummer to do a deal where you get shares in another company, and then you find out, oh gosh, I got to pay tax on those shares, and oops, I can't sell them for 5 years. That kind of stuff happens a lot. And so a lot of times cannabis companies just kind of want to get these deals done because it's a bit of a race, and we really need to slow down and make sure we understand the tax consequences of these deals. And I'm sure, Dan, you're seeing and helping people out with that.
Definitely.
Yeah, we're seeing a lot of that as well all over the country. I'll just throw this out. We are doing an M&A event on April 7th next month in LA. Dan, like to hear you at that event, see what you have to say. Dan, I kind of want to shift a little bit. You and I had kind of done a webinar last year, and we talked a little bit about 471C, and I'm wondering if there's any updates in that area. Are you seeing anything out there in 471C? And let me just say, last we heard, the IRS had put out some regulations saying that they didn't really think it changed much. Couldn't be used to expand cost of goods sold for cannabis companies. Since then, we know that cannabis companies are utilizing Section 471C. I have a couple new audits that just started in the last couple months that involve Section 471C. It's in their 3-year lot audits, and the 471C elections show up in later years. So we haven't really dug into them yet, but we will, I'm sure. So Dan, anything you're seeing out there on 471C?
So, no, like you said, it's still taking some time, I think, for 471C to, for taxpayers to make the elections. There's always been a timing issue with a lot of clients as far as when they file, and so as a result, we've got a lot of extended tax returns that wait until the extension deadlines before filing, and so that causes a little bit of a lag, I think, out there as far as 471C is concerned, and the tax returns getting selected for audit. So at the moment, we don't have a ton of volume, or at least I haven't come across a ton of volume of cases that involve 471C, and then the IRS, taking a position with respect to it, short of what you described a second ago as far as the regulations that they came out with. But as time has gone on, and we've continued to assist clients with their books and records and making the 471C election, what's just become more and more and more critical is that taxpayers make sure they keep their side of the street squeaky clean, so that when you do get into these situations, and we tell all of our clients, prepare for the worst, hope for the best, and prepare for the worst is assume 100% of these tax returns are going to get audited. And so, keeping your side of the street clean, really from a compliance standpoint and a legal standpoint and a books and records standpoint, making sure that your T's are crossed, your I's are dotted, and because then when you get into these audit situations, it's about interpretation of the law. You're letting the accountants and the lawyers do their jobs, and it's not about did you follow all of the rules, or were you compliant? Did you file on time? Did you report everything? Those sorts of things. Those are just some easy examples. The only update I have is just sort of a emphasis of what I've been saying for years now. If we're making these elections in 471 to use 471C as our cost of goods sold accounting method, make sure we follow the law down to a T. So that way, when we get into these situations, like I said, it's just about arguing how the law should be interpreted. It's not about are the numbers correct and is everything in the right place, if that makes sense. So that's
sure.
Kind of the update I have there. And I believe there's a recent case, Lord be the commissioner, where there's a quote that you've shared with me in that case that kind of goes back to that same idea in terms of you make sort of that same concept that let's isolate the arguing about interpreting the law from, did you follow the rules? And if we followed the rules under 471C, I believe the quote that you sent me basically says that there's not a lot that can be done to say a different rule should have been followed. I don't know if you wanted to share that quote.
I got the opinion right here, Dan. I went ahead hot off the presses, right? Another horrible opinion for the cannabis community. More pain. As with these opinions, though, these I don't know. Last couple of years, we've seen opinions that are just terrible for the industry, but there's just a little sliver of something in there that we like to look at. So, for example, in San Jose Wellness, there was a statement in there about 280E not applying to startup or wind down, even though they held against the taxpayer and every single thing possible. There's this one little statement, and it's become a hobby of mine to look for those statements, I think, in these cases, because you got to find something good to think about. So Dan, I got it right here, and I'll just go ahead. It's towards the end, and it basically says that the commissioner's authority to determine whether an accounting method clearly reflects income is not without limit. When a taxpayer consistently applies an accounting method, so that's what you're talking about, consistently and accurately applying the 471C accounting method. The quote goes on to say, consistently applies an accounting method explicitly provided to it by the code, which 471C is, the commissioner cannot find that the method does not clearly reflect income and cannot therefore change the taxpayer's accounting method. Pretty big statement, right? 471C just says, hey, reported according to your books and records. And here it says that if you comply with that statutorily provided accounting method, that the commissioner does not have the authority to change it. So I like that statement in the 471C small business world. I think you're really, really wise in your comment about, look, we got to comply first to make sure we're not fighting about whether we complied with 471C. Right. So that the argument is about what can be done with a valid 471C method. So very, very wise. And the way to do that is to have a good accounting team that is going to make sure that you comply with the method. And Dan, that last minute, hey, returns are due tomorrow, here's my books and records, that's not a good client for that, is it? They need to do a little better, don't they?
Right. And you're exactly right, Nick. It really goes to kind of living and breathing the method. If you do decide that 471C is right for your business, it's not just a tax election. It really is, as you stated earlier, it's following the books and records and the accounting method for the business. So it really means changing the way you do business and report the activity of your business, in this case specifically in the cannabis industry, consistent with what you're then going to report on your tax return, saying 471C is our inventory methodology. So in that, like you said, the consistency and working with strong providers as far as CPAs and legal, don't discount either, Nick. Having good counsel, look over the wording and some of these disclosures or whatever it ends up being, or reading your accounting manuals, performing internal control testing. That's another thing we're doing for some of our clients. So they've got books of internal control tests that they can hand to an IRS agent to say, here's how we know our numbers are right. That to me is the way that we set the stage for the best possible outcome. Not guaranteeing anything, nothing's guaranteed. But like I said, when we're planning for the worst, and when we're in court, at least we're not arguing about whether 2 is 2. We know it's 2. It's just, is 2 what the law, the interpretation of the law, allows for. And like I said, that's in the hands of the court system, the attorneys, the CPAs, and that's where you want to be if you're a business owner that's growing, processing, or selling cannabis.
Wise words from a wise man who always leaves me feeling like I need a style coach or something. I don't know, boy, Dan. I've got to get these going earlier. I gotta get my wardrobe back into shape for these webinars with you, my friend. Really appreciate your time, Dan. And Heim Lance, really great firm there on the East Coast. You guys are in Maryland and Washington, D.C., as I recall.
Yeah, actually in Annapolis, Maryland, just about half an hour from DC. Yep.
Yeah, Annapolis, great. Maryland.
So, no, I appreciate it, Nick. It's always a pleasure to be with you and to work with you. You guys are doing so many great things out there, and I just love that we get to be a part of that. So, thank you.
Likewise, Dan, and you can find these recordings on gmlaw.com. Thanks so much, everyone, and have a good day out there. Thank you.